Welcome back to the Freedom Escape. Before we begin, we want to say a huge thank you to everyone who has subscribed to our channel. We are a new channel, and every single subscriber, like, comment, and share means the world to us. Your support motivates us to continue creating high-quality content. If you're interested in global finance, investing, world markets, economic trends, and the biggest financial news every week, you're in the right place. We upload new videos every week covering the most important events shaping the global economy. If you haven't subscribed yet, make sure to hit the subscribe button and turn on notifications so you never miss an update. Now let's dive into one of the biggest financial stories of the week. Global markets. Take a step back this week, global financial markets experienced increased volatility. After months of strong gains, especially in technology and artificial intelligence companies, investors suddenly became much more cautious. Major U.S. indexes closed the week lower. The Nasdaq, which is heavily focused on technology companies, suffered the biggest decline. The S&P 500 also lost ground, while the Dow Jones Industrial Average experienced a smaller decline. Although one week doesn't define the future of the market, these movements caught the attention of investors around the world. So what happened? Let's break it down. Why investors started selling. The first reason is something called profit-taking. Many technology companies have increased dramatically over the past year. Artificial intelligence became one of the biggest investment themes in the world. Companies involved in AI infrastructure, cloud computing, semiconductors, and software reached record valuations. When stocks rise this quickly, many investors eventually decide it's time to lock in their profits. That means selling shares after large gains. This selling pressure can trigger additional selling from other investors, creating larger market declines. It's a completely normal part of every bull market. AI stocks under pressure. Artificial intelligence remains one of the strongest long-term trends in the global economy. However, many investors began asking an important question: have these companies become too expensive? Some AI companies have seen their stock prices double or even triple over a relatively short period. When expectations become extremely high, markets become more sensitive to any negative news. Even strong companies can experience temporary corrections simply because investors believe prices have moved ahead of reality. This doesn't necessarily mean the AI revolution is over. Instead, it may simply represent a healthy pause after an extraordinary rally. Oil prices rise. Again, another major story this week was the increase in oil prices. Whenever geopolitical tensions increase around the world, energy markets often react immediately. Higher oil prices affect almost every part of the global economy. Transportation becomes more expensive, manufacturing costs increase, shipping costs rise, businesses pay more for energy. Eventually, consumers may pay higher prices for goods and services. This is one reason investors closely monitor oil markets every single day. Why inflation matters. Higher oil prices can create inflationary pressure. Inflation occurs when prices continue rising over time. Central banks have spent the past few years fighting inflation through higher interest rates. If inflation begins accelerating again, central banks could delay future interest rate cuts. That possibility makes investors nervous. Lower interest rates usually support stock markets. Higher rates generally make borrowing more expensive for businesses and consumers. As expectations change, markets often react very quickly. How investors respond. During uncertainty. When uncertainty increases, investors often move money into assets they consider safer. Examples include government bonds, gold, defensive sectors such as healthcare and utilities, cash. This shift doesn't always mean investors expect a recession. Sometimes they simply want to reduce risk until the economic picture becomes clearer. Market rotations like these happen regularly. Should long-term investors panic? History teaches us something important. Market corrections happen frequently. Even during long-term bull markets, stocks experience temporary declines. The world's greatest investors understand that volatility is part of investing. Instead of reacting emotionally to every headline, successful investors usually focus on long-term fundamentals. They ask questions like, is the economy still growing? Are companies still making profits? Is innovation continuing? If the answers remain positive, many investors stay focused on the long-term picture. What could happen next? Over the next few weeks, investors will closely watch several important events. Corporate earnings reports will reveal how major companies are performing. Inflation data will provide clues about future interest rate decisions. Oil prices will continue reacting to geopolitical developments. Central bank officials will also communicate their outlook for the global economy. Each of these events could influence financial markets. What this means for everyday investors. For everyday investors, this week's events offer several valuable lessons. First, markets don't move in straight lines. Even the strongest rallies eventually experience pullbacks. Second, diversification remains extremely important. Owning investments across different sectors and asset classes helps reduce overall risk. Finally, staying informed is one of the best investments you can make. Understanding global financial news allows investors to make better long-term decisions rather than emotional short-term reactions. Conclusion. This week reminded everyone that financial markets can change quickly. Technology stocks pulled back, oil prices increased, investors became more cautious. But moments like these are a normal part of investing. Whether this becomes a short-term correction or something larger will depend on future economic data, corporate earnings, inflation, and decisions from central banks. We'll continue following every major development here on the Freedom Escape. If you enjoyed this video, please leave a like, subscribe to the channel, and share this video with someone interested in global finance. Thank you again for helping our new channel grow. We truly appreciate every one of you. We'll see you next week with another update on the biggest story shaping the global financial markets. Take care, and thanks for watching.